Okay, hey guys, good morning. This is Demetrius again with Aquila Traders, and I'm want to do this video this morning because I've been trying to capture a good live trading opportunity to show how we use the Fibonacci tool. And so, well, right now we're taking a look at gold. We're trading gold, and I'm going to look at the 4 hour time frame here because on this 4 hour chart, this is where I want to take a look at the opportunity that we have on gold. So I've got this chart zoomed out back until sometime the end of December up until now. So as you can see, gold has been in an overall downward trend for this time period right here. And so what I want to look at is the way we use the Fibonacci tool is as long as the market's been moving down in this direction, we want to take a look at some impulse moves here. And so I'm going to go back in time to see when is the last big impulse move, and that would be when gold peaked up around this period here. Let me get this out of the way. Let's see what time that was. That was around uh, maybe January 11th, somewhere in this time frame here. But anyway, this swing high here is what I'm wanting to look at, and I want to do my Fibonacci between this high peak here into the low that it made. So when this dropped down and made this low, I'm wanting to see, how strong was that move downward, and then how much has the market retraced or pushed back since that time period. And so let's do that because we're going to try to use this tool to help us find a good entry on gold to see when's a good time to buy, when's a good time to take profits, all that kind of stuff. So let's start with our Fibonacci tool over here. And so I'm pretty much just going to take it and start at where this high point was that I was interested in and drag it down to this low point. And so once I do so, the magic number that we're looking for, the golden ratio, is the 61.8. And as you'll see right here, my 61.8 is my golden ratio. That's pretty much the main fib level that we're looking at to help us determine whether price is going to conform, if it's going to stay within the normal sequence of where prices should go, or if it's going to fall outside of that. And so as we see, if I move this a little, I'm going to let it slide me back in time a little bit here. So at the time that we made this low here, and I'm going to see what date that low of gold was made on January 17th. So on January 17th, we came to a low of around $2,000 and $2,001. Okay. So from this point, I was able to draw my Fibonacci. So now I'm looking at this golden ratio. I'm wanting to see how does the market handle this 61.8. Are we able to push above that 61.8? If we are able to get past that golden ratio, it would indicate that the price of gold is going to, take an upward trend. If we cannot get above that 61.8, it says that the current downward trend is going to continue, and we can continue to expect to see the prices of gold fall. So let's kind of go over here and see as time progressed what happened. And so as you'll see here, we did a couple of times. The market continued. It tried to make a push up the first time. So between January 17th and January 19th, these again are 4 hour candles. So the market tried to push up, but look what happened when it got to this 61.8. And again, we could have drawn this, our Fibonacci, back on January 17th. So we would have known on January 17th that the resistance area or the point of interest for the price of gold was the 61.8, which was around $2,039. So at that point, the market tried to push up and got rejected. We could not get above that 61.8. Okay. Then the market pushed up and tried again. A couple of days later, could not get above that 61.8. Tried one more time, the third time, and it just pushed back down. And so from that point on, we saw that, hey, this is pretty good resistance here. Gold does not want to push above this. So where is the trade opportunity that we're looking for? I know through our experience in trading gold, just studying this asset over days and days and months and weeks and years, we've noticed a very good pattern that we like to trade with gold. And so when I like to use that 61.8 as my signal for that. And so when and if the price of gold does push above that 61.8, it's an indicator to me that the market does want to continue to push up. It may just not be ready. And so I'm going to go back to this point here. And if I zoom in a little bit, you'll be able to see what's very important to me. And so this first time that we tried to get above 61.8, again, back on January 19th or so, it got rejected, but nonetheless, the price did cross that level. If I zoom here to see the very high of this candle, the high of that candle was approximately, what is that? 2039 and 54 cents. Okay. The 61.8 level was $2,038. So the price did push past that, even though by a very minuscule amount. In the world of technical trading and analytics and algorithms and all that kind of stuff, that's very important. So the price did break above that 61.8. It just did not sustain it. Okay. So let's move forward in time. And now we made these other tries. And so today, where we are, is we're back to the point where gold pushed above this 61.8. And so I want you to see what's important here. Again, 4-hour candles, a little earlier today, the price of gold pushed above 61.8. And the price that it got to was 2040 and 15 cents. That's important again because it was higher than this previous time it tried. But even more importantly, we finally got a candle to close above that 61.8. So right now, that's confirmation that the price of gold, at least for this next short term time period, the price of gold is getting ready to go up. So we crossed this 61.8 area. And usually what happens is if, particularly with gold, if we push past this 61.8, we get a close above it. The market almost always retraces and reacts to go back to test the previous support level. And so the next fib level below this 61.8 is the 50. So the 50 fib level is what the market needed to pull back and test. So this 50 fib level right here is the price is somewhere around 2032. So once we broke above this 61.8 area, what we're seeing right now, this is live here on January 30th, around 10:30 a.m. or so Eastern time. The market made a huge drop down in this direction. Now, really, actually, what happened today is there's news. There was news on Jolt's job openings or something like that, and whatever. Pretty much, we found out that historically, the news is just a way for the market to move the price to where it's supposed to be and just move it a lot faster. So once this candle here closed, which was the 10 a.m. candle, once that candle closed at 10 a.m., we should have known by this point that gold, two things. One, the price of gold closed above this 61.8, so it wants to go up. Second thing is the market is getting ready to pull back and retest this area here before making its move up. And so that's what we're currently seeing here live. So the trade opportunity that we're looking at is we're executing a buy on gold. And this area, this target area here was for it to hold this 50 fib level here. There's another aspect of trading that we use, support and resistance, supply and demand zone areas that I don't have time to go into detail about. But the critical area here is this previous candle right here. So if you see, this is a previous bear candle where the price pushed down before we made this high. And so that bear candle there is of huge importance. And so the buy zone for this is actually right in here. Let's see. So I'm going to capture the bottom of that candle. So this candle is really the target area for us to take a buy on gold. So anywhere between, let's see, the price, anywhere between this 50 fib level, which is 2032, down to 2028 and 50 cents. That's the targeted buy area for gold. That's where we want to execute our buys. And so the market just pushed down in here. Again, this is a 4-hour candle. It can be quite a while. But what I would expect to play out here over the next probably even hour or so is that the price of gold has shown it came down. It tested this lower area here where we previously had sellers activity. We've tested this 50 fib level. And so I would expect the price of gold to continue to push up back to beyond this previous high here. So a good trade opportunity is going to be to enter again somewhere between 2032 and 2028, and to take this to a minimum of 2048. So a move between 2032 to 2048, that's about a $16 move in gold, depending on what kind of leverage you're using. That can be $16, that can be $160, it can be $1,600 or more. And so that's the trade setup that we're going to use. But hopefully this explains how we use this Fibonacci, what these key levels are, and why they are important. So the 61.8, the 50 fib levels are the ones that you want to look at. So hopefully this helps you guys. This video was helpful. Definitely like our channel, subscribe to some of our videos. So as we do these kinds of things and find opportunities in the market, we can share them with you. But hopefully you guys are able to take advantage of this gold trade, and we'll see how this plays out, and maybe come back later and post some results, or do a follow-up video after the market has shown that it did what we were expecting it to do. Okay. All right. See you guys next time. God bless you.